get that development returns. So you kind of look, man, within the time that it would take you normally to save a deposit, you can buy the house cash. Now, that's not a promise. We can't promise any guarantees. Because we're issuing equity securities, we're fully regulated under the Financial Market Conduct Act. That means that what it is that we're doing has got a full product disclosure statement attached to it. So read the PDS, it's on the disclosure register. It lists everything out. And away we go. So, great concept, but it's real because we've actually done it. Our first project, Victor Lima 6, breaks ground in March 2026. Where are we now? Yes. So what I'm going to do is I'm going to ask Joshua, who is brazenly adorned in a Propopoly t-shirt, to come and tell us a little bit more about this wonderful development that we've got that's designed for living and built with intention.
Cool. All right, I got a clicker. Dangerous. Yes, I'm Joshua. I'm the development manager for DevGru, which is our obviously partner delivering these, well, this first development and future developments as well. The first project that we're doing is at 6 Viewlands Avenue. It is 8 townhouses, so 4 duplexes. How many people did catch the radio interview yesterday with Heather Duplessis-Owen and Dihad? So about, yeah.
Do you guys think that she grilled me enough?
I think she went light on you, actually.
Yeah. You reckon?
It's because I made her laugh at the start, eh? Yeah.
So yeah, she asked some really good questions, right? One of the things that she brought up is there's surplus townhouses in the market right now that aren't selling, yeah? So why build townhouses? Well, it's really interesting. On paper, what does really, really well for value is to cut land as tiny as possible and build as tiny a house as you can with as many bedrooms as possible with no parking. That's going to give you the best paper return. So what we see is this massive amount of 73, 75 square meter, 3-bedroom houses. Who the heck wants to live in that? Yeah. Right? Like 73 square meters, there's 2 double garages. Yeah. So yes, there is a townhouse problem, but it's a wrong product because they're not designed for living. So we've kind of come at it a little bit differently. Firstly, we really wanted them to be pretty. I don't know how many of you guys have seen the sort of orange, mustard, yellow painted townhouses full of James Hardy, no parking, no backyards, no landscaping, nothing. So from a very much form perspective, giving some beautiful angles to the roof lines, giving awnings that give a little bit more privacy, a little bit of I don't know, panache as well, and going with a really cool, different Spanish glazed brick, which is that bad boy down there, to be something that you're going to be proud to be in, right? Something with a bit of street presence, something with a bit of character. Doubling it up with the weather text as well to give that sort of Japanese burnt cedar look, but without having to maintain it every 3 years because you are up 3 stories. But where it really sets out is these are nice to live in. So where I used the 73, 77 square meter example before for 3-bedroom townhouses, these ones are just over sort of 150. It's not that much more expensive. You get economies of scale when you get to that sort of side in terms of the build costs, right? But in terms of livability, that width there is often 4 meters or less in these little townhouses with staircases, right? So your living room's 3 meters wide. It just doesn't make sense. These are 5 meters wide. They're full open plan. You can actually fit your dining room table. You actually have room for your lounge, for your TV, and it exits straight out onto outdoor living area, which is not a deck. It's at floor level. So you've got that nature around, you've got that planting.
But hang on, Joshua, you just said that there's 3 stories.
There is 3 stories.
So does that mean that we're living on the ground floor?
So, cool. Great question, Dihad. Thank you. This one was not prepared. How we managed to do this was a little bit of trickery anyway. The zoning for this is mixed housing suburban. So any of you guys that are in the property space would know normally you're limited to 2 stories. Height in relation to boundary is the biggest challenge. The beauty and the difficulty of the site is it's a little bit like that at the moment. So how we're dealing with that is driveway on the low side, going into what is essentially a basement garage, which is what you're seeing there. So your garage is underneath, and then your living exits at floor level, where you get those sort of advantages. On the flip side as well, we've also got out of this window here, every single unit will have views over the Manukau Harbour. So you're not looking just over another townhouse. you're clearing the neighbour's roof. Very unlikely that it gets built out. It's somewhere that people could imagine not just living but enjoying, which is really, really exciting. I don't actually know if Dion put the second one on. Yes, he did.
Hey.
Look at that, fantastic. In the 2 bedrooms as well, there's 2 bedrooms, basically switch up the topologies a little bit, make sure that we get that absorption by not having everything exactly the same. Really high spec 2 beds, double en suites, so suitable for your professional couple that has a family come occasionally, those sorts of things, even splitting there.
But I
also,
thought you said that 2 bedrooms don't sell, Joshua. Now you're saying that we've got
I said
2
3 bedrooms don't sell.
Okay, 3 bedrooms. Oh,
Yeah.
sorry.
3
Apologies.
bedrooms, 77 square metres. Going back to the 77 square metres, these are 125. It's 2 beds. All right. What you've got here as well, internal deck looking over that view. So for having that glass of wine in the evening, just off the master bedroom with your significant other, it's a really cool little space. So exit price wise, obviously we can only forecast. Having said that, we did go and get a independent valuation. It's funny, we run processes for everything we look at, right? And we run models, we super data driven, there's a lot that goes into it. But we run them pretty quick. We run them pretty quick. We produced a full CMA that obviously needed checking, but that happened, within 15 minutes, the initial run?
Yeah.
Exit value, just under $9 million. So just to give you some context of what all 8 will be. Registered valuation came in within $20,000 of what our CMA was, and they were up 20 grand on what we thought it would sell for.
So not 20 grand per house,
No, 20 grand overall. So 0.02%.
0.2%.
No, 0.02%. So we know what we're doing, kind of. But yeah, really, really excited to bring something that the market will work with. We did a lot of absorption data as well. We looked at what house sizes were actually selling in the area, what was staying on the market for too long. Part of the why we went for this development is we checked the last 3 years of building consent, nothing like this product. There's a whole bunch of new-ish builds selling for premium price points that are similar sort of sizes, but nothing in the new build space either. So really captured a little corner of the market. So yeah, really excited to get this one rolling. It's going to be an awesome little project. And I think that's about all I've got to say on that one.
And that's the first of many. So maybe just tell you guys just a little bit about the vision. So 1 development, 1 SPV, right? So equity securities. I'll just get financial just only for a moment, just so that we understand what we're up to. So equity securities is a financial product that's usually around, but it's around at a level where the companies that are issuing equity securities are sort of issuing equity securities to raise 25 mil. Now, most of the advisors that we've got and that we've been talking to, at first when I tell them what it is that we're up to, they just kind of cock their head. Now, I used to have a Siberian Husky and it would, like the look wouldn't be too dissimilar. So with a product that goes normally for 25 mil, why are we only pointing it towards something that we're only raising $1.6 million for? I mean, that's absolutely ludicrous. The amount of administrative burden that we have in order to do this just doesn't make sense. Sure, if you're only doing 1 of them. Yep. Now, each company is its own financial company, it's its own financial service provider, it's its own ring-fenced SPV. Yep. You're only purchasing into 1 company at a time. The shares can't be traded from one company to the other company. It's not a financial market. Yep. So, but what we're up to is we are helping facilitate, and our vision, our mission, is to do 60 of these projects over the next 3 years. So what we're wanting to do is we're wanting to deliver 1,000 homes in the long term. The goal that we're setting is to do over the next 3 years to have 350 homes delivered. 350 homes delivered. That's 350 families. Yeah. And not just that. I mean, if we look at the theoretical upper limit of the amount of people that can participate in this property development, it's roughly about 3,800, something like that. 3,300. Quick math. Yeah. Play the game with me, right? So then if that's the theoretical upper limit, what's the theoretical lower limit? So no one person in this can have more than 4% control of the entire company. Why have we done that? Well, because otherwise people go, hey, this is a great investment opportunity. The whales just come in and they just take everything out again. So what good is that? So by design, this is a retail product. Why is it a retail product by design? Because in order to be a retail product, it's any time that there's more than 20 investors involved. So 4% means that there's, by design, minimum of 25 people to participate. So that's sort of the nuts and the bolts of what it is that we're up to. First project, Victor Lima 6, VL6, vl6.co.nz, info, plenty of information there, product disclosure statements on the disclosure register. Now, I'm happy to, we're going to jump into a sort of a fireside style type chat in a moment where we're going to talk with some educated people, some financial, shakes his head, some financial advisors, and as well as a director of Victor Lima 6, the first company. So, but as far as this goes, any particular questions? Happy to quickly just take one or two, maybe pick on Joshua as well if there's anything that you guys are after.
If I put $10,000 down, how long do you use my money before I basically get dividends or gets it? Is it after every project is completed that I can withdraw?
Correct. It's a defined life cycle. So money in, we fund it together. It gets built by the development partners, gets sold down. Once it gets sold down, the company itself gets liquidated, and all of the profits gets distributed. Hang on, FMCA. All of the profits, if any, gets distributed to the participants, to the investors. Cool, great question. Anything else?
What kind of reporting would you be doing?
Great question. So we are operating with full transparency, updating at every single stage of the process. Because it's essentially what we've got is so Propopoly, we're a fintech and a software platform. The companies, the finance companies that are coming in is using the software to issue the equity securities. So being fintech, we have a platform that we're able to push updates regularly. So essentially every investor comes in, they've got a wonderful little portal. Now we've already had a couple of people go through the portal and experience kind of what that's like. I think first updates are going out tomorrow. I should say that with more certainty. First updates are going out tomorrow. So fully locked. We also communicate via email, and we basically just report every single step of the way. To get into this in the first place, it's full IFRS standard financial reporting and full auditing at the end of the project as well. So full independent audit taken. The auditors that we've brought on board for this project is BDO. Our internal advisors from an accounting perspective is EY, and we're partnered from a legal perspective with Lane Neve. So whereas a lot of the other innovation companies that's trying to utilize blockchain technology and tokenization to do this, everybody's trying to innovate around the regulation. What we've done is we've decided to build within it. So it's not built to usurp it, it's built to operate within it. So essentially it's just a share, and then the token is stapled one-to-one to the share, and that's the information layer. So that's what enables us to, and why token, why a blockchain? Why blockchain? Because blockchain is immutable. It's a ledger. You can't go backwards. You can't change it. So there's full traceability of the entire process. So that means that we can report on project updates, tracking, everything, any type of level of reporting that we have to do of what's happened, we've got that information available. Cool. Great
Just
question.
on that as well, Dihad, because we do have the PDS system and we are operating with the FMCA in mind, any new relevant information that we get, by right, we have to report anyway. So one of the more exciting things that we are on the works is on this project, we're getting very close to locking down the final contracts for the head contractors. It looks like the costs that we had run the numbers off, which are the best information we had at that point, it's going to come down slightly. So there's going to be an update going up for that.
So we will issue those updates once the information is available.
Once the information is correct and available. Yeah. This is only indications at that point, but you know that's what we have to do once that information is the best information on the market. So.
Yeah, so that's IFRS standards, right? Especially when you're producing prospective financial statements. You have to operate at the best information available. Very good. Cool, anything else? And then we can jump in. Well, let's not have the financial advisor chat before we have the financial advisor chat.
Yeah, everyone's stealing my thunder.
Yeah.
As well from a market perspective that we have a unique opportunity to really show people what's happening as it happens. So I think that reporting not just on the numbers but also on progress that way.
So maybe I should return the question and go, what type of reporting would you like to see?
No, I think that's it.
Yeah.
You were selling a dream, you're selling people investing in property development which they've never done before,
Right?
and you educate them along the way.
Yeah.
That's exactly right.
Yeah. No, brilliant. Okay, well, should we have some more little nibbles and drinks and then we reconvene in like 5 minutes' time? Thank you, everyone.
Good to see you.
So I have asked, and I've been very sneaky, because I've asked Daniel
I'd love to
Carney
come.
at the very last moment if he would mind coming and having a sit down with me for a fireside chat. So I told everybody else that we're having fireside chats except the guy that I'm having a fireside chat with. so that's just a little bit unscripted, and I think that just makes it real and makes it genuine. So Daniel, thank you for letting me rope you into doing this and agreeing to it. Maybe just obviously for the people here and also for the audience on the live telecast. Maybe just quickly introduce yourself and tell them who you are.
Okay. Well, my name's Daniel Carney. I run Good Life Financial Advice. It's actually about a 27-year-old company. It was started by my wife's uncle, but now my wife and I own and run the business. I'm a single advisor business, and we're all about growing and protecting Kiwis' wealth. I met Dee Hart down in Queenstown last year at the Crypto Winter Conference. So I am very pro crypto, pro Bitcoin, and pro property as well. In fact,
And now you're Propopoly.
exactly, yeah, exactly. It's all working out. So if you look at our client base, actually, the lion's share of where our clients' wealth has come from over that 27 years, incidentally, it is property. I'm obviously trying to pivot and get our clients into other, actually trying to get our clients exposure to Bitcoin as well now. But the lion's share of our clients' wealth has come from property. I do advise on about 90 million of client funds under management as well, like KiwiSaver, etc. But this really intrigued me because of the blockchain and crypto leaning, but also the property leaning. And our clients are everyday mum and dads, and their kids are everyday Kiwis who are also, struggling to get on the property ladder. So for a number of reasons, this intrigues me, and I, anything that I'll be talking to you about is really purely from a basics, if I can use the term dummies angle, because, I want to understand it properly myself, but also, if we're going to be talking to clients about it, or even just putting out information about it because it's interesting, it is very interesting. Asking the dummies questions is what I would be probably coming from the angle of for this fireside chat.
That sounds great. That sounds amazing. So you understand though that this isn't crypto. Oh my goodness, you're talking about a non-crypto use case for blockchain technology. That's something pretty...
Yeah, I thought I might be using a bad word there or the wrong word, but that's just how I met you, and so that's what's in my head.
Of course. No, so I love crypto in itself. I think it's amazing, just the access that it's given people to, being able to self-custody and being able to take control of, their own financial aspects. So the entire premise of blockchain, I think that's very much really true to me as well. So I think it's that same emotion that comes into this. It's being able to take control of your own financial future in an asset class that's normally been completely closed down. Not just property, which everybody knows it's hard to get into, but the value creation part of it.
So let me ask you, because I've gone through it's actually timely because I've gone through the process of being an investor myself with this first project. So I know the process, but what I don't know is how did what I just go through relate to the blockchain? Like which blockchain are you using? Where does that come into the picture? Because my journey, I don't know that I'm on a blockchain. So tell me about that side of it.
From the user experience perspective, we've done that with intention. So it's kind of like blockchain underneath the hood. Like the technology is very robust. Like a blockchain is literally, it's a perfect ledger that's from one from one transaction to the next that gets verified by more than just the one point of reference, so that it's immutable in that way. It can't go backwards, it can only go forwards, and it's proof. So Solana is the network that it's on.
Okay.
So again, that's literally just for the traceability of it. So just to be clear, what it is that we're doing here, the blockchain aspect of it is really just the information layer. All that we've done is we've taken a normal share in a company, an ordinary share in a company, and we've stapled that one-to-one to a token, to a blockchain element that moves. So that there is, the share cannot move without the token moving, and the token can't move without the share moving. So that means that we've got an information layer that's immutable, that's permanently attached to a share. So what does that do for us? It lowers the administrative burden that would be attached to being able to issue equity securities. There's a reason why most equity security offers are like north of 20 mil, right? So what we're doing is we're utilizing the technology to provide easier access to that. So your personal information doesn't go onto the blockchain. It's literally just so as crypto is cryptographic proof of who owns what, it's that same cryptographic proof that we're taking and attaching it to the share. So in order to get onto the blockchain, and in order for that transaction to go through, there's a tremendous amount of AML compliance experience. So Daniel, maybe just quickly just share, how did you find the AML process? Maybe just quickly just talk, what was your experience? What did you have to go through?
It was very easy. It was just a standard AML process that we all have to jump through hoops anytime we onboard with any platform. But the system...
When you say any platform, you mean any crypto platform?
Any platform, Sharesies,
Sharesies, yep, cool.
or SwiftX or Pay It Now. So no, it was a very streamlined, standard AML KYC process and it was pretty quick. I guess the technology is there now where behind the scenes, if you're who you say you are and you live where you say you live and etc., it's a fairly streamlined process. So it was easy. Yeah.
So just quickly, just for clarity, basically, like I was thinking about trying to do a live demo here right now, connecting it to the TV to actually show it through, but I think it's just way cooler just for everybody else just to actually experience it themselves. So you can literally go right now, you can go onto VL6.co.nz and you can just start the process. And it's as simple as, it's literally as simple as starting an account, and then the account takes, and the account helps you open up a wallet. Now, it's literally just a wallet that's securely where your funds and where your tokens are kept. And the process is very simple. It basically starts with AML, where you need to prove that you're you by taking a quick little video selfie, turn left, turn right. Because we're in property, specifically residential property, it's residential land in New Zealand is sensitive land. So that means not anybody can own it. You have to legally be allowed to own property in New Zealand in order to participate in this. Now, for all intents and purposes, we could open this up to the international market as long as we don't go above 25% ownership for internationals. But considering that our whole mission is to be able to generate value and generate wealth for Kiwis and for New Zealanders, for this first project, we've just completely closed it. You have to be a New Zealander or be a New Zealand resident. So what that means is a New Zealand passport or a New Zealand permanent residency visa, meaning that you're legally allowed to own residential land. So that means we need a passport. Yeah. So quick video selfie, photo of your passport, that gets checked. Then the next thing that we got to check is we got to, just from an anti-money laundering perspective, we just got to make sure that we know that it's your money that's coming in. So you got to verify your bank account, prove your bank account, prove that your bank account is your bank account. So is the bank account details, proof of account, does that match what it is that you've put on your passport, what it is that you've put on your account, and what your address is of the bank, is that the same as the address that it is that you've entered into? And and then there's various sophisticated risk ratings and bits and pieces that we do, and automatically it all gets flagged if it goes too much, and we manually audit and we manually check and so on and so forth. But the whole process is relatively smooth, up until the point in time that you go, hey, cool, I've got it, and then you subscribe to the shares, and then just like that, you've bought a share in a company that's issuing registered equity securities specifically for the purposes of doing property development.
So you're saying that you're owning a share in the company that owns the development. So when you purchase these shares, your name's going onto the company's office database?
Oh, that's a great question. So considering that there's, for instance, with this first one, there's 16,442 shares on issue. Each share is $100. So that means essentially, and it's minimum 5 shares per person. So that means essentially, there can be like more than 3,000 people. It would be very administratively burdensome and, dare I say, impossible in order to have that be on the company's office. So what we've got is we've established a structure where we've got a licensed trustee that holds the shares on bare trust for the investors. So short answer, no, your name does not go in the company's office. You have got the full economic ownership and the full economic rights to that share, but that share is held on trust or in bare trust for you. So bare trust specifically means that the trustee has got no control, no voting rights, no economic power over that at all. So that it is essentially your share, there's just somebody holding it in trust for you so that you don't have to be on the company's register.
Okay. And what's your expectation around how long it might take to sell down this?
Great question. So we've got full forecasts and full disclosures. Again, this is a registered offer of equity security for retail money, right? So it means we're operating at the highest level of scrutiny here. So we've got full IFRS reporting, which is a particular style of financial reporting standards, international financial reporting standards. And those standards, basically, we map the entire life cycle of the company. And the life cycle of the company now, if everything goes how it is that we're forecasting to go, the entire company will be done, wrapped up within 12 months. So that we're expecting to pay the first dividend 26th of February 2027. So that's when we're expecting to have the payout happen. So it's basically less than 12 months from now. So it's a very short turnaround.
Okay, so and when do you think the project will be completely finished?
So we're aiming to, based on the construction plan, based on the construction program, we're aiming to have the dwellings be fully built, fully consented, and fully sold down by Christmas.
This year?
This year, correct.
So is that model going to be the same across all of your developments?
Every single project is its own project. So depending on what it is that we're doing, depends on what the timelines will be. So we've got this interesting dynamic here where we can't do too big a things because then everything just takes too long. But we can't do too smaller things because then we lose the economies of scale. So all of the projects that we're picking and all of the projects that we're developing are projects that sort of sits in that, dare I say it, the Goldilocks zone of being able to be sufficiently sizable enough in order to derive equitable returns that any property developer would be drawn to, and at the same time not so large that there is challenges with absorption and trying to sell down the homes, because this is not a product for yield. We're not building these things to hang on to them to try and get the yield. Yield from investment properties is, it's obviously it's a mechanic, but anybody that really kind of knows property kind of actually understands that it's really that developer margin. That's actually where the real fat sits. So, and that's why the developers, now I was busy chatting with somebody else and they kind of just said, I need to, when I talk about that, but I need to simplify it. And what they said is they said, I should just ask the question, has anybody ever seen a property developer be an Uber driver? And I was like, okay, that's a great question, but I like Uber drivers, so I don't want to I don't want to diminish what it is that they're up to. They get me from where I am to where I want to go. You know what I mean? But I think they made a really, really good point. Property developers make a tremendous amount of money, so being able to give people the exposure to that value creation cycle, beautiful.
So someone buys a share, $100.
Yep. 5 shares minimum.
5 shares minimum. Okay,
Yep.
$500.
Yep.
You say 5 shares minimum?
5 shares minimum for entry, but why did we break them down into $100? So that, because there's a secondary market.
Okay.
So that they can still trade. So maybe you come in and you purchase 20 shares, And then during the time as it goes, as there's constricted demand, then potentially you can, should you choose to, sell your shares at that point in time, potentially for more than what you've acquired them for originally, without the project even finishing. So there is a secondary market that's for trading.
And that'll all be on through
Correct,
the
yeah,
same website?
Through the same web app, yes, correct.
Okay.
Yeah.
So just walk me through, someone's purchased the minimum amount, 500,
Yep.
and they hold the whole way through.
Yes.
In this particular example, that Victor Lima 6.
Yep, correct.
So you're saying in February next year, you're planning to pay a dividend to the shareholders?
Yes, correct. So that will be a dividend, and that dividend will be have full imputation credits attached to it, together with withholding tax. So that means that the dividend is already going to be taxed and be paid out, just to take again just care of any of the administrative aspects for the retail investor, for the mum and dad type investor. So that unless your personal tax position is that you're getting taxed at a higher rate than 28%, chances are you'll probably get a tax return. Right?
Okay.
Yeah.
And what happens after that?
What happens after that? So the first dividend gets paid, and then once the project is, so essentially what happens is, like, let's say for instance, let's just take this actual project, right? So there's 8 dwellings. Yeah. The moment that the last dwelling goes unconditional, all secondary market trading stops. No more trading, because then the profits are locked.
Mm-hmm.
It's not fair to let the people trade anymore, because then it's like unduly you might not. Again, it's all about the protection, investor protection. So all of that stops. Then the moment that settles, we pay the first dividend, and then we retain just a little bit of it to pay the second dividend right at the liquidation point, together with the original investment amount attached to the token. So essentially a dividend, and a first big dividend of profit, then a small rest of the profit together with the original investment, based on the returns of the project and what the project has delivered.
So let's say you experience financial hardship partway through,
Mm-hmm.
and I need my $500 back.
Yep.
Can I get it back?
So you can, if there's liquidity in the secondary market.
So just through the secondary market?
Just through the second. So it's a closed loop system. It's a closed loop. So you can't take your share and go sell your share on another listed stock exchange or anything like that. You can only sell your share within the platform, because it's not, whilst Propopoly, whilst we're the technology provider, every single SPV runs its own platform. So it's got its own platform, and it's within that platform that it's a closed loop.
Mm-hmm.
So that it's the issuer of the equity securities that can help facilitate this transaction between a willing buyer and a willing seller of their own equity securities.
So now I have a question that I don't think you're going to be able to give me an answer to.
Let's try.
Okay. Conservatively, as an investor, what sort of return would you expect on your investment?
I would recommend for you to read the PDS and the prospective financial statements, because we've got these prospective financial statements, and we've got that forecasted together with a complete sensitivity analysis of what's going to happen, and based on these inputs, if this was to happen, here's how that affects the returns of the company. So again, it's prospective financial statements done to a full international financial reporting standards. It's IFRS 42 is the actual proper standards that it gets done to.
Mm-hmm.
And what's the base case in the prospective financial statements is from the $1.64 million worth of equity, and that's also what's on the info.vl6.co.nz page. What the forecasted profit is based on that scenario is about 460,000 from the 1.64 million, based on those assumptions. So it's not guaranteed. Can't make guarantees, can't make promises. Financial Market Conduct Act, we can just provide the information so that a investor can make an informed decision.
Okay. And would you say the information that's in there is it's just reality, or are you erring on the side of caution, being conservative?
So if you kind of look at the two parts of property, right, of property development, there's two main parts of it. There's the inputs yeah, and then there's the outputs, yeah. So the outputs, what I'm talking about is I'm talking about the market side of stuff. How much do the units or the dwellings, how much do they sell for at the end? So that's an unknown. You're saying, hey, in a year's time from now, can I accurately say how much that's going to sell for? So for us to help, you know, alleviate some of those pressures and some of those risks, that it's not just us saying that that's how much it's going to sell for, we've got an independent valuation from a registered valuer who registers the development on an as proposed basis, not how much he thinks it's going to sell for then, but how much it's going to sell for if it was to sell today, based on a willing buyer and a willing seller, and based on, you know, a appropriate amount of marketing and an appropriate amount of, you know, without any duress or without being forced into a sale. That's what they believe it would be transacting for. And what's really, really interesting is because we come at this from a fintech and a data perspective, it was really nice to know that the valuation numbers that we've put forward, when we got the independent valuation came in at $20,000 more than what we had put. Now, that's not $20,000 per dwelling, it's $20,000 across the entire development. So it's like a 0.02% variance. So it's just really, really nice to know that our conservative numbers matches up with a registered independent valuer of what they, a robust process that they run it through as well. So that's the, sorry Dan, that's the market side of the risk. Then it's the input side, yeah? It's how much can we actually build this thing for? So there what we've done is we've entered into, and we are entering into the contracts on a guaranteed maximum price. Yeah. Now we can't take out all of the risk, yeah, because there's certain things in going to the ground that you can't, you know, there could be a lava flow or something like that, so extra rock breaking is required. So those are sort of the things that we don't know. But however, we've gotten you know, core samples or drill borehole samples like across the entire development, and from all of the core samples, the geotech is really, really beautiful. Not expected to have any, but all up of all of the cost inputs, roughly about 90% of it is fully locked. So that 10% variance, that's sort of the unknown.
Okay, so you could probably argue that we're beyond the bottom of the property cycle. So probably in a year's time, we're going to be in a better situation than we're in now, probably. Who knows with what's going on around the world, but you know, so it's probably a good time to be doing something like this, right, as an investor. So just explain to me your take on what if we're starting this journey at the top of the property market?
So irrespective of the market cycle, we're not speculating at all. We're not factoring in our exit price plus the market expected appreciation. Our exit prices are what it would exit for at today. Now, from a market dynamics perspective, you know, I once heard somebody say that economists are too clever for their own good, but they're not clever enough for anybody else's. So one of the challenges is, how can you say what's going to happen in the future? Well, there's leading indicators, and then there's lagging indicators, and based off of the market cycle, all of the indicators say that we're at the bottom, and it's not just us that's saying this. I mean, one of the directors of Victor Lima 6, which is the first company of the offering these equity securities, is he was previously the development manager for Fletcher's. He's basically the OG, the original gangster property developer. Right? He's been through more property market cycles than we, and chatting with him earlier on today, he was just like, he's been through enough cycles to be able to say that we're at the bottom of it. So again, no guarantees, but that's the general sentiment. So how many projects like this would you like to be doing? We're aiming to do 5 this year, and 60. Our long-term goal is to do 60. Basically, we're aiming to deliver 350 homes over the next 3 years.
Sorry, how many per year are you hoping to do? How many projects per year?
We're hoping to do 6 this year.
Okay, sorry.
Yeah, so another 5 this year.
Yeah.
Before ramping up, hoping to do 60 projects over the next 5 years.
Yeah.
Hoping to deliver about 350 homes in the next 3 years. Delivered.
Okay.
Not active, but delivered.
So can I ask, just on a different tangent, what happens if, in a scenario that, you know, you've sold down, say, a third or a half of the shares required, and there's
a little bit more to go.
yeah, what happens if there's no more investors?
I start
In the
selling-
worst case scenario.
I start selling my shirt. No, I'm joking. No, so what we've got is we've actually got a entity that's providing an underwrite. Yeah, so we've got an underwrite that's been provided for the developments. Now, the underwrite for Victor Lima 6 is 22.5% of the development of the required equity. So there's an underwrite of 370,000 for this one. So that means that if the development only gets to funded to 77.5%, then, you know, or slightly more than that, then Tero, who's the underwriting company, will step in and take up the rest of the portion. And I mean, in the unlikely event that we don't fully subscribe, we have options to make some calls and make some decisions whether or not we choose to extend the. But like, look, at the end of the day, right? You're disclosing all of the risks. You're bringing people in, and if it doesn't get funded, then it's like the market's spoken. They don't want it. Then the fundamentals are there. Now the risk for us with that is that we're brand new. We're brand new. This is the first one. Yeah. So, like, if you get it, you get it, and you get that this is access to something that just, you know, that's like, everybody talks about disruption, Daniel, and everybody talks about doing stuff, but like, and maybe I'm biased because, you know, this is my baby, but like realistically, the fundamentals are there. Just have a look at it, read the documents, you know, go through the process. It just makes complete sense, because it's like, for the first time, somebody can come in and they can participate in that margin that people, that's the 1% of the 1% gets to play at. And now all of a sudden we're democratizing that. Oh, how beautiful is that? How wonderful. Imagine it.
It is a beautiful thing.
Yeah.
So something that impressed me about this whole baby was the amount of regulatory hoops that you have jumped through.
Oh,
So just
I think I've aged maybe about 10 years in the last year. Like, realistically,
But
I'm 19 years old.
this is going to give warm and fuzzies to mum and dads, right?
Right.
So just talk a little on the amount of government departments and big five
Just
accounting
mention,
firms.
Just mention all the three-letter ones.
Yeah. Give us an idea of the regulatory
the
compliance.
The FMA, the IRD, the DIA, you know, all of
OMG, FFS.
yeah,
EY.
FFS, yeah, all of them, yeah. Service provider, yeah, all of them.
But tell us about the services that you've hired and.
Right, yes. So in order to, thank you. So in order to execute this, I mean, like,
Because you haven't done this, from my perspective, you haven't shortcutted this, which is, again, to give the warm and fuzzies.
yeah. So I think just the recognition of the fact that this is a first, right? I mean, how do you do something that's never been done before? You get the best people to do that thing. And what that meant for us is partnering, first of all, with amazing legal counsel. So we partnered with Lane Neve, a very well reputable. So Andrew Comer from Lane Neve, he's our legal partner. He holds a master's in essentially in blockchain and distributed ledger and legal aspect for blockchain. So you kind of look at how you've got the right guy, got the right legal expertise, one of 10 partners at like one of the top largest law firms in the country, doing that with a master's in blockchain technology, the legal side of the stuff. Perfect. Locked in, yes please. And then, so the legal is the one side and then the tax is the other side. And then from the tax perspective, we're working with EY Group. They're Rachel Jemming, she's one of the cleverest women that I've ever met in my entire life. I shouldn't say woman. She's one of the cleverest humans I've ever met in my entire. Oh my goodness, I'm getting smacked already. One of the cleverest humans I've ever met, and she's got a tremendous amount of expertise, having previously been with the IRD, and having been involved with a lot of the crypto and distributed ledger technology and the blockchain side of things, with helping on the policy on that side of things. So armed with the right legal support and with the right tax support, it's kind of just keep going, just driving until it can get done. Because there's been a couple of, not just a couple, there's been a fair few companies that have tried to do distributed ledger technology and attach it to property in New Zealand. To the best of my knowledge, well, I know for a fact nobody's succeeded. Yeah, hello, we've actually done it. So, and I think what it is that's made the difference is that we didn't try and innovate around the regulation, we built inside of it. And we didn't try and skimp, everybody goes, no, stay away from retail, stay away from retail, stay away from retail. Wholesale's so much easier, there's so much less burden, all the bits and the pieces, but you kind of go, then all that we're doing is we're just building a better mousetrap for the people that have got the cheese to trap all the other little mice.
Yeah.
So let's rather just open that up. So that's why I just went, man, this is the only way to do it.
Yeah, and I think that's actually something that impressed me because, you know, we've been inundated over the years, like recent years with, you know, I'm not naming any names, but opportunities to get into development by putting up certain amounts of tens of thousands of dollars, and they're all for wholesale, you know, accredited investors only, who actually probably aren't.
Yeah. So I understand exactly what it is that you're talking about. Anybody just needs to look in the news and everybody knows what it is that we're talking about. And I mean, understanding that case and what it is that they've done, I mean, it's absolutely disgusting.
But so I know it's very, very difficult and a lot of work to get your offer in front of A, retail clients, and B, a really low barrier to entry, right? $500.
$500. For $500, become a property developer. Yeah.
So that's these are all little things that are going to help, I think, with the to make the general public comfortable with the offering.
So talking about the general public, we have some wonderful humans here with us. Should we maybe open up just for some questions? And both, not just at me, please, everybody. Ask Daniel some questions as well. So maybe I'll start with a question for Daniel, and then we can pass off. So Daniel, what is it that you like most about this?
Well, what I like most about it actually is the running my own numbers on my compound interest calculator with what I think I won't disclose those, but what I think the returns would likely be. You don't actually have to put in too much over, for example, a 10-year period,
right, to
have more than enough for a deposit to buy your own place.
Yeah.
So you were kind of talking about this before, but actually that's what I really like about it, is it's a investment vehicle that could very well surpass other standard asset classes for people to put their money, which could get them enough for a deposit on their own family home in a
very short amount of time.
Short amount of time, yeah. So I really like that. It's opening it up, but I also like the low price point, and it's just giving everyday people an opportunity, which is my client base. It's just everyday people, you know, not the richy riches of the world. So yeah, that's what I like about it.
Amazing. Any questions?
For Daniel, so what's your primary concern?
Well, I was thinking that before when I was asking around, you know, I was going to ask what do you legitimately think are the biggest risks? I guess the primary concern at this point in time is we're early days, and will it get funded? And what happens if it doesn't get funded?
Well, it will if everybody tells other people about it.
Yeah. So, but then, you know.
So that's your responsibility.
But also, you know, you mentioned people are not going into this. They shouldn't go into this with their eyes closed, right? That's right. They've got the PDSs. Yeah. They can see what the risks are. I'm assuming you outline the risks
extensively.
In the PDS, so that was my biggest concern. And
so if the project doesn't get funded, in the unlikely event that happens, then the funds just get returned. There's no, hey, it's our money, you don't get it. It's just that. Less any transaction fees. Yeah. So the transaction fees to come onto the platform with full disclosure, to come onto the platform, it's 1%. So that's the funding fee. That's essentially the platform fee for facilitating this market.
I guess also, I would say in terms of concern would be, when we're talking about property with clients, it's a 10-year hold.
Yeah.
Ideally.
Yeah.
Which
so
is
then you're speculating long term to have rental returns to help you build equity in the property
and get an average conservative average per annum growth rate on it, right?
Yeah.
So I guess the other thing is, let's just say you put in $500 and we are at the peak of the market and the properties sell in a year's time for less than the value that was done at the front end. So could people lose?
But hang on, you're saying less than the value that's done at the front. So the big thing here is that we're taking a bit of dirt. And
I'm sorry to
no, I love it. No, I love it.
John made me.
I love it. We're taking a bit of dirt and we're converting it into highest and best use. So there's a genuine value creation cycle here. So it's not that we're coming into something where all of that value has already been created and then we're owning that and holding it, hoping that over time the price increases whilst we're trying to get other people to pay the rent to help pay the mortgage so that we do all of these things. So what it is that we're doing is we're literally taking something that's just like if you kind of just think about the commercials of it, right? You're taking a bit of dirt, you're buying a bit of dirt for $1 million, you're spending $3 million in developing it, and then you're selling it for $5 million. So you're making $1 million off of that $4 million, but it's not really taking you the $4 million because you're only putting up $1 million for the dirt, and then the other $3 million is funded by debt.
Borrowed,
Yeah, correct. So that's the construction finance. And so, we're fully using construction finance in order to deliver it because that's how you get the returns.
So could there be a scenario where you get less in than you put it, less back than what you put in?
As per the wording in the product disclosure statement, that's fully a risk that you may, those returns. And I'll just caveat that by just saying, have a look at the inputs, have a look at the fundamentals of what it is that we're saying and what it is that we're showing. Have a look at the contracts, have a look at the numbers, and they kind of speak for themselves.
Yeah.
So in this world of, in this regulated, fully regulated financial world, you can't give guarantees. You can't. So. Cool.
Keith, you want us to have a fireside chat?
Well, apparently he wants me up there, yeah.
So we'll just quickly, thank you Daniel, we'll just quickly bring Keith up. Amazing. Thank you for the great.
All right, thank you.
So just being respectful of everybody's time, I'm happy to keep chatting, but if anybody, just being respectful of anybody's time, if you guys need to duck, more than welcome to, or otherwise have another drink.
Or both.
Or both. So this is Keith Kerr. Keith, maybe just quickly tell the wonderful people, who are you and why are you sitting here?
Who am I and why am I sitting here? So I'm a happily married man with 2 wonderful daughters and a granddaughter. And the whole thing is to remind me to talk about the bank of mum and dad. That's very important that I do talk about that. So a qualified aeronautical engineer out of the Air Force days, and then in a very what we call thin threads, got frustrated with being in the military for a number of reasons, but found and met a young financial advisor that was the same age as me, and found that he sold this stuff called life insurance, which I had no idea what that meant as a 23-year-old. 39 years later, here I am still in this wonderful industry, doing the whole gambit of financial services through the home loans, and that's how I met Daniel, the life and health stuff, and also the investments in KiwiSaver. So one of the things that I've been really passionate about for many, many years is financial literacy in New Zealand, and that's something that unfortunately is still really bad. One of the things we did stunningly well, so I was one of the 6 people to get New Zealand home loans off the ground back in 1996, and one of the things that we were really focused on was helping people understand their cash flow, because it wasn't about the interest rate you paid, it's not the rate you pay, it's the rate you can pay it off that's important, so to use their cash flow as efficiently and as smart as they could. And we did that very well under the radar, under the bank's noses, and then we built a really good business very, very quickly. The banks could always do that, but they chose not to tell the people about it because they wanted them to be in debt for 30 years because a mortgage stands for death grip, and it certainly does do that. So I suppose I've been really focused on helping people to create wealth and to pay off their debt at the same time, as they protect what they've got. So I run a very simple triangle in modelling when I talk to clients. You've got your debt. If you're in a debt position, we need to help you with that, and at the same time we need to help you accumulate, whether that's KiwiSaver or whether that's other investment opportunities, but at the same time protect what you've got going on, whether that's life insurance if you've married, with kids and you've got that situation, income protection, health insurance, all that stuff. So everything needs to happen together. But the one thing, I suppose, is it's been such a narrow way, not just New Zealand-wise, but worldwide, very narrow in the ways that people could create wealth outside of property in New Zealand. And it was really, for what people perceived as you had to be really smart to get into the share market, you had to understand it better, and so it wasn't really well taken up by a lot of people. They thought the property or buying investment properties was the only way they were going to get ahead. Things like Sharesies came along, which has been absolutely brilliant, and they've been really good with the whole thing around a bit of financial literacy, and I spend a lot of time working with them as well. So that's one of the vehicles that I think is going to help and has helped a lot of the younger generation from probably 40 down that really can now buy some shares in Apple or buy shares in Tesla. Whereas before they had to go through a big scary, stockbroker and pay big high fees. So they've really marginalised that, and they've really, and they've made that into quite a commodity, which I think is fantastic. And that leads on to this, because I've always been, and if you ask my wife, if you ask Lee, with me, I've always been an entrepreneur. I've always chased the shiny thing. I've always got to have the latest iPhone, this, that, and everything else, until I listened to John's session with Leighton at the end of last year. So I now have the Solana phone, as does Daniel, but that's another story. So I've always been open to all sorts of ideas and investments and stuff, and we've been active investors in that for many, many years, and we're very strong. And for those that know my wife Lee, she's very, very, very good radar on her as far as the bullshit monitor. And when I met you with Daniel, I went down to that blockchain crypto winter and met John down there as well. The one thing, when we all went out for dinner that night, when we couldn't get into somewhere else, and just 8 of us stragglers just ended up going and having dinner. Rachel was there, Luke was there.
Yeah, correct.
And so Luke, who runs the Bear Trust for this organisation, which is fantastic, very smart guy. And then met Rachel, who's from EY. And again, a very, very capable, smart woman who was ex-IRD as well, so she knows how the enemy think. So, she was very good in helping put together this package with the full transparency. So, meeting you, and then the next time we met, one of my really good mates was at lunch at the same time, and you met Murray. And he thought you were a good guy as well. So it's just all alone. So Lee and I invest in people. I mean, obviously it's got to be a good idea, but we certainly invest in the people that are behind it, and we certainly like, what you stand for, where you've come from. Obviously met your mum, know all about your history, and really, really like who you've put around you, the team you've surrounded yourself with. You've got some really cool people, and you haven't been scared to spend the money to get the right advice. You've got EY, top shelf. You've got Lane Neve, top shelf. Kevin, obviously on the board with you and I on VL6. He's an exceptionally smart, talented, conservative guy that will tell you if it's not going to work, and he's certainly challenged you and me, but that's his strength, and obviously me on the finance side. I think, and to Daniel's point just before, I believe like this is a new shiny thing, but what I do passionately believe is that yes, this is going to be the interesting one to get cranking and getting off the ground, but we are going to hit the numbers, and I think we will hit the numbers. But I think what's going to be really positive going forward is when we have a good story about we've done the first one, we're on to 2, 3, 4, 5, 6, and on and on and on. I believe that those same people are going to be the ones that reinvest in it, and they're just going to go like that. And so we're almost in that situation like the Trade Me, where they hit the market, they did it well, other people tried to make another Trade Me, failed. I'm not going to say others. I mean, others are going to try and copy what we're doing, but I think the amount of time and effort and work that you've put into getting this right And and I've been part of the journey with you ringing me saying, oh God, what are we doing here? What can we do here? But the fact that we've done it, FMA have been with you or been with us every single step of the way. So they are intimately involved and understand what's going on. There's no surprises for them at all. They signed off your press release, that basically the top line said, in accordance with, what does it say, in agreement with the FMA, and then boom. So I mean, what more credibility can you have than that? So yeah, I think we've just got to get out there and tell people this wonderful story, because to give people the opportunity to get into property development for as little as $500, I think is just sensational, and it's going to create opportunities for people in New Zealand to start creating wealth a lot faster than they've ever had the opportunity to do, in a reasonably safe way. And the safest way is a first mortgage on a bit of dirt, and that's where Daniel was going before. And that's technically what this is. It is dirt that we're doing a project on. First mortgage. You can't get any safer than that. And as long as we keep all of our ducks in a row and get the people that say they're going to build it within that time, and they do it within that time, and there's no big surprises. And I don't think there is, because you two over there, Josh and Dan, have done stunningly well with looking at every single thing that can or can't go wrong. And Anita's done all of the front end stuff with DHard to get it out there into the market. Yeah, winner. I'm really excited about it. I really am, because I think it's going to change the narrative. It's going to change the way people perceive wealth creation, or another opportunity to create wealth in as safe a way as possible, and getting not a significantly better return, because one of the things I did talk to DHard about is don't blow out the return to being so stupid it looks Ponzi scheme. We just can't do that, and we won't. But to do it in such a way that it creates consistency, that every project is consistently delivering these sorts of returns, because we've done the numbers, we know the numbers, and as each one goes on, it's going to get not easier, but it's going to get more reliable. It's going to get a lot more, there's going to be, what's the word I'm looking for? Efficient, thank you. The efficiencies of the system are going to be there. And again, being on the blockchain, I think, is hugely important, and the more people that understand and learn that, and that's what we need to probably spend. I don't know what Anita's done with that, but I think that's one of the things that people need to understand more, is just how secure blockchain transactions are. Can't be changed, can't be corrupted. When you've got bad stories out there like the Duval Group and all of that sort of stuff, we need to build the narrative to say not like Duval, but this is how we do it, and this is why your money or your investment, it's not safe, but this is why it's going to, I don't know how you're going to do it. You're the one with the clever words, Anita. But just trying to build the narrative around how these sorts of projects, because of the way it's in the blockchain, you're protected.
Now that's something interesting. I'll just comment there, Keith. You see how, because it's a registered product, and it's under the Financial Market Conduct Act, right, of 2013. You see the amount of catfooting that needs to almost happen, because legitimately, I just want to say what I know. I can't. So I have to continuously check myself and just hold it back, and no, can't say that. And it's I find that part interesting. But one of the questions I did want to ask you, Keith, is so you've agreed to come on board as a director of essentially a first project, a first world a world first of tokenizing equity securities for property development, and allowing retail investors to participate in the entire development life cycle, from purchasing to building to selling to exiting, right? Now, why did you choose to do that?
Why did I choose to get involved at that level? Because I believe in it.
Have we got the microphone?
Got a microphone on
No,
here.
I think that microphone is for the telecast. There we go. We're going to mic you up. No, keep that one on as well, Keith. We're going to have two mics. It's oh my goodness, you're so mic'd up now.
Mic one and mic two.
That's it.
All good. So your question, so why did I decide to get involved? Because I believe in it. I really do believe in the concept. I think the product disclosure statement that's been put together is probably the best not probably, it is the best PDS I have seen, and I, unfortunately, in the role that I do, I mean, I read a lot of them. I think between you guys and Lane Neve and the way you put it together, you've made it very understandable. You've made the everyday Kiwis, which are the people that we are trying to get involved in this. I think it's made it very believable. It's made it very understandable. There's a really good call to action in there. I think the transparency in there is just next level. Not because we have to, but I think it's the right thing to do, and I think it's going to build significant credibility going forward, is that these guys at Propopoly have said what they're going to do. There's been no secrets. We can't find anything wrong with what they've said. They've done what they said they're going to do in the time they said they were going to do it, and now they've got project 2, 3, 4, 5, 6 on the way, so why wouldn't you want to invest in that? And as I say, I mean, I truly do believe that once we get the believers involved, I think they'll just roll from one to the next, and that's where the compounded returns on, you know, their first project returns, and so they put in 10 grand and they get 12 back. They put the 12 into the next one, that becomes 14 to 15, 15 becomes 20, and then as Dan said, you know, you do that 4 or 5, roll that over 4 or 5 times, and then that's quite a significant amount of money that we can then help them get into their first home.
Yeah.
And it might even be a Propopoly project home that they buy, you know, which would be even,
Wouldn't that just be
really
amazing?
cool. That would be stunningly cool. And what good media would that be? Anita would love to get her hands on that.
What good media would that be now? That's interesting. So knowing that I had a wonderful chat last night with News Talk, with Heather from News Talk ZB, what do you think the media is going to make of all of this?
Well, they're just out for clickbait at the end of the day. I believe that if in 6 months' time, or sorry, not 6 months, but when that first project happens, that if you can manage to get on her show again and say, told you so, because I do like her. I mean, I don't like many journos, but I actually do like her. She calls a spade, and I think that if she does, you know, if you do put that back in front of her in 12 months' time and she sees that it's happened, I think she could be a big convert. And if she's got the PDS, I mean, I don't even mind emailing her and saying, hey, how much you want to put in, and see what she says. Because again, I just think with what you've got coming in the coming days, going out into social media, LinkedIn and things like that, it's going to create a real groundswell. It really is.
I had a fantastic chat today with Maria Slade from the NZ Herald. So I think that there's a little bit of coverage that's going to be happening with that tomorrow. So excited to see what she thinks of it all.
Yeah, so just talk about Banker Mum and Dad again, because you did talk about that when you did the intro. It's again something that mums and dads are having to help their kids into property. Like Lee and I have helped both of our daughters into their properties. But what does come along with that is there's a lot of legalities that do come along with that, and some of the paperwork that that we've made sure that the girls have signed, just in case things don't work out. That we don't want the other party to come and try and have a crack at half of it. Not that we think they're two wonderful men in their lives, but you never know. And I'm not talking about my girls, but I'm talking about other clients that I work with. That you just really need to make them understand that we've always got, unfortunately, we've got to look at the worst case scenario. It's something you can rip up in 5 years' time if you want to, but you really, and this is where, and I work very closely with the law firm that I've been dealing with for many, many years, and Tammy from Devonport, she's been very, very strong in putting out a lot of good content around the Banker Mum and Dad stuff and the legal things that need to be thought through, because she's now got enough precedent from working with people like myself and Daniel, where things have gone wrong. And so what I think the Propopoly is going to do is it's going to give people, if they've got a 3 or 5 year time frame, they can try and get stuck into this, and within that 3 or 5 years create the money. They don't have to go to mum and dad, or mum and dad can help them out to a lesser amount. But it is, getting significantly harder to get those people into their first homes. It really is.
Should we maybe quickly open up to the audience? Any particular questions based off of this chat? You can grill him, or you can grill me.
You've all covered it so beautifully.
Okay, wonderful.
I understand everything now.
Wow. Amazing. Okay.
Let's just tell everybody about it.
Yeah. Yeah. So maybe let me ask a question to the audience. If there was to be one thing that you would go away after tonight and tell somebody else about, what would that one thing be? So maybe just two or three things, please. Who would say what? Maybe John, seeing as you're right front and centre. What would you say?
I mean, the thing that I like the most is democratizing property investment. That is the thing that I like the most. I think that you've hit the nail on the head. Like, I don't sit on millions of dollars where I can go and buy $1 million properties in Auckland and then develop those into something else. We've just sold a property in the middle of Barney Crescent. $5 million for the property, another $5 million to renovate. Who's sitting around with $10 million in cash to spend on their single family home? And I think you're addressing a really important gap in the market. And honestly, I'm super impressed that you managed to get through all the regulation, because I know what it looks like.
Yeah. I saw a big nod go there. Yeah.
I think the biggest thing is accessibility for everyday Kiwis. So
Yeah.
I think that's probably the biggest takeaway.
Yeah.
I will actually be investing myself, even though I'm here as a wholesale investor. But
Yeah.
I think the product's really well thought out.
Yeah. Cool. Amazing.
Thank you.
Thank you.
I even sat thinking, may I speak?
Please, always.
That I'm looking at it as a double. It's a double whammy. It's basically you investing, getting a good equity return, but it goes further. You've helped to basically bring a family as well into a property because of the fact that
That's
You've
right.
provided the cash. Yeah.
provided it.
Correct.
Yeah.
That's right.
So it's for double. It's a blessing that you're sending out. That will always return to everybody that will be an investor, because what you do sow, you reap.
Yeah.
So to me, there's a double with
Yeah.
it.
That's actually a
Yeah.
really good
Yeah.
point. That's a very emotive statement.
Yeah.
That's I think there's some wheels on that.
Yeah.
That you're actually helping you're helping to fund a family into the ones that choose to buy one of those homes.
That's right.
You're helping them. That's really clever. That's very smart.
While your investment directly helps the economy, you're not investing in an ETF.
Mm.
That is some offshore company that is running
Yeah.
based off tom-toms in the streets. You're literally helping keep more money in this country, which it just needs as much as it can. It needs as much as it helps. There's no industry here. The
That's
industry is property, which is really bizarre. But that's what we are here, thanks to Rogernomics.
That's a really good
So
point
we
too.
need to
Circular economy.
strategy to keep the money in this country.
Yeah.
And not sending it offshore and have our governments literally keep telling us that export is the only way to make money in this country through dairy and meat. And outside of that, top of 1% is the one who are doing the developments in this country. So it keeps the money in here, which is what we need to develop the nation.
That's a really good point too.
Titi, may I ask, what did you like most about it?
For me, I think many a times people are afraid to go into pyramid schemes or places where they lose money, and yet they start something off with so much hope. But this is so different in the sense that you do see the returns quite quickly, just within after a year or as the project progresses. And many young people who probably have $1,000 in their bank accounts are able to use that money and have a culture of building up their money, and it's not just sitting there getting 2% interest for the whole year. So it's something that I think I'll be telling my children, my adult children, about this opportunity and see what they can, rather than think of investment in the linear way that we've always thought of it, but this is something innovative, and I think it's really great.
Fantastic. Thank you. And then Chat. Thank you. Sorry, Chat. Thank you. It's like I was like, Thanks, Chat.
Yeah, I echo the points everyone else has said, but along with that, I understand that I guess most of us, say millennials or Gen Zers, we've got money in the bank, in savings account, and your money's sitting there not actually doing anything. It's not actually bringing any benefits to you or providing any equity in the long term. Whereas using tokenization and property, you're actually able to own a piece of something, and especially with the culture New Zealand has, to own property and want to own property, like it lets you step into the markets, and even if it starts off small, like that compounding effect can really make a lasting impact, and I think that's really powerful with time.
Beautiful, beautiful, cool. Any other closing sentiments?
I used to use these stats like if you start saving at $20, $50, if you start investing $50 when in your 20s, then you can be a millionaire. But there are some people that like may feel like they're missing the boat a little bit, and that they would still want to have that freedom a bit later. And I think that there's a nice sweet spot here where there's ability for them to not feel like they've missed out too much. And so even where like my dad's he's in retirement, but he just spoke to a KiwiSaver specialist, and he's still thinking about what he can do with his money, though he's in retirement. And so, yeah, I was just thinking that he's had those moments where like there's being too late, and then making up for it.
Interesting. Not missing the boat. Love it. Love it. Hey, well, thank you so much, everybody. Really appreciate it. Now, feel free to keep hanging around. More drinks and nibbles. Thank you.
I'll just explain the series.